What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, I noticed something going on in the market and I wanted to talk about it. I don't really have all the answers for it, but I noticed something was happening at the end of my video that I recorded this morning. And I noticed that the prices kind of started falling a little bit. I've already gone through and edited my whole video. And we can see that Ethereum is kind of pulling back to what potentially looks like some type of neckline happening in here. Finding some support on top of that neckline right now. It's been a few hours since I recorded that video. Really, it's been about 4 hours. Bitcoin really just staying within its range, not really having any type of big dramatic price action. But when these moves down happened here, these little tiny moves that happened in here for Ethereum, like really the biggest move of the day, you could say, it's the merge jitters being over or whatnot. But there was something else I noticed that is happening over here in the broader markets, and it's gold. And we've talked about this over the last several months, that gold is looking awfully familiar to what the top of Bitcoin looked like. Initial crash coming up, a couple of peaks up in here, unable to get out. We know this is when Russia invaded Ukraine. This is when there was a ton of people flocking into gold with massive volumes coming in there on gold, but yet unable to break out into new all-time highs. With its inability to break out into new all-time highs, saying, hey, you know what? This is starting to look awfully familiar to what Bitcoin's top looked like. And well, if copper can be any type of predetermined factor of what's happening here for gold, we saw copper do precisely this and then crack down and break down, and gold looking awfully familiar to it. And if gold was to pull off a similar style move to copper, well, it pulled all the way back down here to the January of 2018 highs. So for gold, that's down here near about 1350. But it's a pretty significant thing that happened today for gold, because we can look back to the last 27 months. This has been the price level that gold has been able to hold on top of for 27 months. In addition, this is also the 200-week moving average that gold is starting to cross through. So it's like, oh man, okay. Inflation? What inflation? We're seeing all types of commodities crumbling, and now we even have gold breaking below 27 months of support and its 200-week moving average. So pretty sure Peter Schiff's not going to be having a good time on Twitter for the next while, foreseeable future, because if this is similar to Bitcoin, if this is similar to a topping structure, this is how Bitcoin played out, right? Not good. Don't know if that'll happen. But I can definitely say I'm not looking optimistic for gold, right? And when this finally happened, I started kind of like thinking to myself, getting a little bit worried, thinking, oh man, this is not good. And it might not, I mean, outside of gold, right? Is it telling a story or a bigger picture for what's going on in the rest of the world? And it could be. I mean, that's 27 months that just got broken in the 200-week moving average. It could. I don't have all the answers for that, for what it means for gold to actually finally break it down. But I did decide to start overlaying some charts to see what happens with gold, what happens with the stock market in situations like this. And so we don't have very many references to go back to and look at, like, how does Bitcoin do in a circumstance where gold is maybe telling us some kind of story? This is where Bitcoin came into existence. So the only real time we've ever had a massive breakdown in gold occur would be right back over here, which would be this moment right in here. And we can kind of like look at the charts to see what was happening when gold broke down in there. We were just coming out of the great financial crisis at that time. So in the orange, this is the Dow Jones Industrial Average. In the blue, I have Bitcoin. And if we kind of like lay a line here for the orange one, which is the Dow Jones Industrial Average, it's the stock market. Kind of take a peek at what was going on here. We had finally broken back above the high prior to the great financial crisis. So breaking back above the high, that is when gold started breaking back down. So it was actually a bullish moment in stocks. And if we look right down in here too, the breakdown of gold was actually really good for Bitcoin as well. And we can see that Bitcoin ripped and roared into gold's actual breakdown in here. So in this moment, it almost seems kind of like a risk-on situation, I guess you could say, right? Markets decided to turn on risks, so they ditched gold, the safe haven. I'm not a huge fan of like narratives, right? But if we kind of like think of it in that manner, I guess you could say that, right? Stocks like saying, hey, we're ready to rock and roll. Bitcoin, let's rock and roll. And at the same time, gold saying, all right, we're done. Alternatively, since we don't have data for Bitcoin going back further, like we can go back to the 1970s and 1980s, right? When gold was in a massive bubble happening at that time. Stocks were relatively flat during that point, but as gold was popping, what happened? Risk on for the Dow Jones, risk on for the stock market. And then when gold really capitulated, stocks were just ripping, right? But, we've been looking at the Dow Jones Industrial Average saying, hey, if it breaks below this 200-week moving average, if it breaks below that February of 2020 high, it signals, hey, this bubble has likely popped. So looking back to the Great Depression, what was going on with gold? Gold's price was mostly fixed for a long time. But if we just kind of look at some historical data to see what was the spot price of gold during the 1929 to 1933, price stayed relatively okay through a Great Depression. But for the most part, in the United States, spot prices were fixed. So they maintained their USD value during that time. So hard to use historical data bouncing here up and down between $20 and $21 during that time. And then it gets repriced, right? Gets repriced all the way up to $34, $35 after the Great Depression has come to a completion, or at least the bottom has already come in. Which is why if you go to a gold bullion dealer, they have a section called pre-33 US gold coins, because at the time you had to turn in your gold. You had to sell it to them at $20. And after you did that, after they got everybody's gold, the US repriced it to 34. So it was actually illegal to own any of these coins back then. So typically during periods of, downward price action in the stock market, at least prolonged price action, gold, performs well. Every historical context we have to go back to for gold, it crumbles during periods of risk on. And so I don't know. I thought it was really interesting. We don't have historical, unless there's a flash crash, right? If there's a flash crash and a liquidity crunch or something like that, gold can spike down with it, like we did during the great financial crisis, but then recovers really fast, or during C19. But otherwise, big moves down, breakdowns in gold seem to be marked by risk on time periods. And so just, looking at what's happening to gold right now, we'll get on this page right here. We unquestionably see a breakdown happening in gold. One would argue deflation, right? I would too. And I'll be spending some more time kind of really diving into this to see if we can find more contextual meaning to it. But from what I'm just seeing by eyeballing lots of these different things, typically when major breakdowns happen in gold, it's due to being risk on, which is the opposite of what we would all think would be happening right now, right? I see that and say, oh, sugar, honey, iced tea. But historical context of all the charts show risk turning on for some reason. It sure doesn't feel like that out there in the world right now, right? So thought I would point that out, that what is happening here in gold looks incredibly similar to what happens when actual breakdowns occur. You're getting through the 200-week moving average, you're getting through a 27-month support, and you were able to just barely set a new high, just like we saw with Bitcoin, right? 2 attempts to really kind of break out, failing, and then now breaking down. Peter Schiff is not going to be having a good day. And so, again, looking at the great financial crisis, right? I mean, that's going to be this whole time period, right in here that, even after the Dow Jones Industrial Average already topped, gold went on and was still setting another new high. And then kind of just, not a drastic move like the Dow saw in here, right? It went from a little over 1,000 to a little under 700. So I guess it's a 30% drop that happened right in here for gold. But, obviously still in a big trend, not taking out levels like this, right? Just still kind of marching along in this upward trajectory. But I see this Dow Jones Industrial Fractal used all the time on where we're at right now. We'll zoom out here. So I see people copying this fractal right here and placing it on the Dow with where we're at right now. So if that was the circumstance right here, right? This would have been our moment back in June. This would have been the recent top we just hit back there back in August, which here on this orange chart, that would be equivalent to this move right here for June. And this is August. But look into how gold was behaving in that moment right in there, that when the ultimate fear happened right in here, gold had set a new high. So Dow topped, gold kept going on to set a new high, and gold still rose another, 54% after the top had already come in for the Dow Jones in here and then topped out at this moment, which would have been June. And you come over to here to us right now and just that's not the case, right? It's not acting like that at all. That this moment right in here should have been a euphoric moment for gold and going off and setting new highs because people being so fearful of that moment, but it's not. Instead, we're seeing gold breaking down. And I just find it interesting. Historical contexts say that when gold has major breakdowns, it's risk on, but dang, it just doesn't feel like that out there right now, as you can see, right? I mean, the last time that this major breakdown happened, it was like a celebratory moment for the Dow Jones right in here, right? Dow Jones had just gotten out into a new all-time high after the great financial crisis. So we're talking 2007, 8, 9, 10, 11, 12, 13. Finally, it gets out of it 6 years later. People are hooting and hollering. They're excited to see a new all-time high. Hey, forget gold. Dump this piece of garbage. Let's go crazy. And then this is also when Bitcoin is taking off and rocking and rolling too, right as that breakdown is happening. And obviously, that's not where we're at right now. Unless if some like big surprise is coming in the market tomorrow or something's coming from the Fed where they're just like, hey, we're done. I don't know. But breakdowns in gold are typically signified by risk on. So we'll keep an eye on it. I noticed it happened today. And when it did happen, that was the same time we saw some negative price action over there in crypto. So I don't know. It feels like we have a new factor to start kind of paying attention to here and kind of working it into all the theses of the markets. My buddy TXMC also posted about it over here on Twitter, and it's something that we talk about. And we've been watching this closely, and sure enough, today was the day. And of course, I commented on there, like we've talked about here on this YouTube channel. Definitely agree, just like copper. So I'll spend some more time on that, contemplating that on my own, but you kind of got to see kind of my brain churning while I was recording this video. Been kind of sitting back, waiting a long time on that. It's taken, years at this point. And really, I kind of started worrying about it the second that Russia invaded Ukraine and gold wasn't able to break out. That's really where a lot of my concern for gold really started to come into play, recognizing that, wait a minute, it wasn't able to get out there. And it's starting to look awfully familiar to what the tops look like for Bitcoin. So I'll be spending more time studying historical context of gold behavior and price action now that we're seeing a breakdown in gold. Of course, the concern out there is, if the bubble has popped for the United States stock market, what does that mean for gold? We don't have the reference to go back to from the 1920s and 1930s because the price of gold was fixed. But what we know is when we got to the bottom of that Great Depression, essentially gold got marked up. So it technically, at the end of that 3 to 4 year period, did really well. While the stock market crashed, 85, 90%, gold got repriced up like 60%. So interesting to see it breaking down. We'll touch back on it again another day. But all right, guys, that's going to be it for this one. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.